Welcome everyone to Vested Interest. This is Shane back for our last stock pick of the day video. We're going to take a look at Vertiv today. It is out of the industrial sector. Before we get too far into the video, if you could do me a big favor, it really helps out with the YouTube algorithm and it doesn't cost you anything but a couple seconds of your time. Hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever I put out any new content. Share the videos with anyone you think that might find value. Drop a comment down below. Let me know what you think. If you want to help the channel financially, there is the thanks button down below. You can buy me a cup of tea. That way, any money I do make on the channel will be split between my portfolio and my daughter's portfolios. I don't make any money currently on YouTube, but hopefully one day we get there. Special thank you to the viewers and subscribers of the channel. The channel continues to grow because of people like you. Right around 13 to 1400 subscribers right now. On to 2000 we go, and I'm only going to get there with your help. So help me get there, help grow the channel, and push these videos out a little further. This is the vested interest stock screener. This is the criteria we will be running through in the video. It must meet 5 of 8 to make it on my watch list. If it was a company in the financial sector, we would add in price to book, with 1 being fair value. Don't blindly use 1 as fair value for other companies outside of banks. That is really specifically for banks in the financial sector. You can use price to book for any company. Just make sure you're comparing it to its historical averages as well as other companies in similar sectors or the same sector. All right, back to Vertiv. Check them out on their homepage, www.vertiv.com. That's www.vertiv.com. That is their homepage where I pull this information from. And Vertiv is a global leader in critical digital infrastructure for applications in data centers, communication networks, and commercial industrial environments. This is very similar electronics company, electrical company that we looked at earlier in the week. You can see here some of the things that they provide: critical power, uninterrupted power supplies, UPS systems, energy storage systems, DC power systems, power distribution, static transfer switches, switchgear and switchboards, busways and bus ducts, liquid cooling solutions, heat rejection, outdoor package systems, room cooling, in-row cooling, right? If you had a row of industrial equipment or a row of data center, for example. Rack cooling, same thing. If you had a bunch of computers in a rack, they provide your cooling system. Free cooling chillers, evaporative free cooling, thermal control and monitoring, custom thermal, racks and enclosures, integrated solutions, racks and containment, outdoor enclosures, monitoring management, digital infrastructure solutions, embedded device management, serial consoles, IP KVM switches, high performance KVM switches, LCD trays, desktop KVM and KM, secure KVM, software monitoring, project services. You can read the rest: UPS and battery services, digital services, liquid cooling services, thermal services, rack PDU services, DC power services. So they'll service, right? They'll install it for you, and then they'll service it after the fact. And that is, again, www.vertiv.com. Now, the reason we are taking a look at them, down 5.99% on the day. We are talking about Vertiv Holdings, ticker VRT, out of the industrial sector. Closed out the day at $120.68. 52-week range as low as $53.60, as high as $155.84. They are leaning more towards their 52-week high than their 52-week low. They are not within 15% of a 52-week low, and not really even close. They need to really drop down significantly more back to their 52-week low to get there. Market cap of $45.992 billion, a beta of 1.73, right? Whenever you see a beta like that, obviously it's more volatile than the overall market, but it could potentially be to your advantage, right? It means the stock is very volatile. It means it goes up and down in drastic swings, and you could potentially use those swings to your advantage, where you're buying on the low side and holding and waiting for it to run up on the high side. PE seems very elevated, so this company would need to be growing extremely fast. PE is not the end-all be-all, right? If a company is growing fast enough, obviously the price earnings, you would pay more for that, and then eventually the company would catch up or even surpass what you're paying for. But that seems pretty high. This is something that you would pay for a very fast-growing tech company, but they do have their hands kind of in those data centers that are supporting the tech companies. So maybe they're growing fast enough to justify it. Again, you need to do more research on how fast they are growing to be able to see what this is, and maybe compare their price earnings with other competitors as well. EPS, earnings per share, is $1.72 per share. Earnings date, was between July, or is coming up between July 22nd and 28th here in a couple weeks. So somewhere in that window. Forward dividend is 15 cents. They are a quarterly payer, I believe. Current yield at 0.12%. This is the first time I'm looking at Vertiv Holdings with you, so it'll be a first run through for me as well. Ex-dividend date, June 16th. We are past that. It looks like they paid out on June 26th, so you would be in line for the next dividend, but you're going to have to wait a couple months to get it. 1 year target estimate, at least according to Yahoo Finance, where I pulled this information from, not affiliated with Yahoo Finance, just one of the sources I go to. They see it getting back to $119.13, would not be back to its 52-week high here. And it currently sits above their 1 year target estimate. Now, jumping over to the right, I like to look at dividend yield theory and see if the company is potentially undervalued. Typically, we look at their 5-year dividend yield average, compare it to where it currently sits. We can't do that because they don't have 5 years of dividend payouts. I think they're right about 3 years in dividend payouts right now. Payout ratio is low, though, at 7.27%, so it means they have a very long runway to increase that dividend, and they are not in danger of cutting it. Now, looking at free cash flow, I want growing free cash flow because companies can do some things with that free cash flow. They can pay down debt, make acquisitions, reinvest back into the company, carry some of that cash on the balance sheet as cash if they can, or invest it somewhere if they want. Pay a dividend. This company does that. Buy back shares and raise that dividend, which I want as a dividend growth investor. I'm assuming you do too. Now, going back in time, you're looking at free cash flow, December 31st, 2022, negative $263 million in free cash flow. December 2023, big jump up, $765 million in free cash flow. December 2024, $1.1 billion in free cash flow, almost doubled it up there. So they are growing their free cash flow very fast. Trailing 12 months, just keep in mind this does include part of 2024 numbers, $1.298 billion in free cash flow. So it looks like they're growing that free cash flow and pretty aggressively year over year as well. We'll have to wait and see how the rest of 2025 shakes out, but it looks like it's going to be another growth year. All right, jumping over to stockanalysis.com. This is another source I go to for information. You pick any sources that you like. I do recommend 2 at a minimum, but preferably 3 or more sources so you can make sure the information you are looking at is accurate and up to date. It gives you sources, multiple sources. If you see some information that's maybe missing, not updated, or doesn't jive with 2 sources, you have a third to look at and see what's really going on. I would not blindly trust any one source for information. Sometimes they're wrong, sometimes they're outdated. It happens. They do have 15 analysts that have taken a look at this over at stockanalysis.com. Again, not affiliated, just the other source, one of the other sources I go to. They see it as a strong buy. Low estimate of $110. Currently sits above that. So if it drops down to their low estimate, that would represent an 8.87% decrease from where it currently sits. Average estimate of $134.79 would represent an 11.66% increase from where it currently sits. And if it happened to hit their high estimate of $165, that would represent a 36.69% increase. And you could collect that. You know, it's a small dividend, but it's a dividend anyway, or nonetheless. Now, I'd like to look at statistics, look at return on capital employed, see how well the company is reinvesting its funds back into itself. I like 10% or better here at a minimum. So we're looking at return on capital employed of 23.50. So that is well above the 10% I'm looking for there. EPS growth, typically I like 5% or better for earnings per share growth. Extremely high, 39.81%. This is why I said perhaps if their earnings per share growth is growing fast enough, that 70 price to earnings ratio isn't as high as you think, but it still seems pretty high to me for a company like this. But again, this is very fast earnings per share growth, and maybe that justifies the higher PE, but you'd have to do some more research into the fundamentals to see that. Revenue growth forecasted at 13%. I like that. This is not part of my initial screener, but it is one that I do on a more of a deep dive, so I added in here anyway. Now, they are a quarterly payer, as I mentioned, payout ratio of 8.03%. So again, very low payout ratio. Dividend growth, very aggressive, 83.33%. Now, I'm not saying they're going to maintain this dividend growth, but that is extremely high dividend growth for a company. And it's nice to see with such a low payout ratio, they are extremely fast with growing their dividend as well. Now, they do say 2 years of dividend growth. I guess that makes sense. Looks like they've been paying out for about 3 years. Now, this is where you want to look here. We didn't look at the shares. They look like they did buy back some shares a couple years back, but their buyback yield is negative. That means they are issuing more shares into the market than they are taking out of the market. We want this to be positive. We want to be pulling more shares out of the market than we are issuing as a shareholder. Shareholder yield is negative. We want this to be positive as well. So we're starting to see a couple of negative numbers, though it's not terrible, less than 1%, or less than negative 1%, I mean. Now, they do pay out, I don't know why this all says in December unless they paid out all their dividends in one shot. Looks like they might have back in 2020, but it looks like they pay out on the March, June, September, December timeframe like most companies do. Going back in time here to December 2020, that would be 1 penny. December 8th, 2023, they raised that up to 2 pennies and the fractions of a penny there. In December 2024, they raised that up to 3 cents and some fractions of a penny. So I would anticipate if they're going to maintain this dividend growth, it will be December of 2025 when we see the next one. And again, I don't anticipate another 83.33% increase, but it could happen. All right, let's run them through the screener. Understand the business. Again, very similar to some companies we've looked at in the past. Atcor was the other one. nVent, I think, was the one earlier this week. So very similar to some companies we've looked at recently, or in the past at least. Growing free cash flow the last 4 years, yes. I would say they have growing free cash flow. Even though 1 year was negative, they went from negative to positive to a little more positive to very fast growth over the last couple of years. Growing dividend, yes. Last couple of years they've been growing that dividend, but keep in mind it's only the last couple of years. Dividend payout ratio is well under 75%, so check there. Dividend yield theory we can't use. They don't have 5 years of dividend payouts yet. It is not within 15% of a 52-week low, so no check there. Return on capital employed, yep, over 20%, so check there. And it is well above 5%. It's actually over 30% for earnings per share growth forecasted over the next 5 years, so check there. So we're looking at 1, 2, 3, 4, 5, 6 out of 8. This one is going to go on my watch list. I would like to do more of a deep dive into the company. Again, I think the price to earnings is a little high, but I'd like to see what the fundamentals of the company, looking at their balance sheet, their income statement, and then possibly doing a discounted cash flow analysis if all of those metrics shake out the way I want them to. So this one looks like an interesting company. Let me know what you think of the company Vertiv down in the comment section below. Ticker VRT, out of the industrial sector. Is it in your portfolio? Is it one you're watching? Maybe it's one that you are selling today. And if so, let me know why. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Vertiv you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section. I'll try to work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey, educational and entertainment purposes. Investing involves risk. You can lose money, should never invest any amount you're not comfortable losing. Always your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. For those of you who made it to the end of the video, thank you for watching. Watch time is one of the metrics that the YouTube algorithm looks at, so I really do appreciate it. Don't forget to hit the subscribe button, the like button, share with anyone you think that might find value. Drop a comment down below. All of those things. Hit the notification bell, and we will see you in the next one.